Well, yeah, banks continue to free fall. Pac West said they're looking for a buyer. Metropolitan Bank seems screwed. All the other original banks are also in terrible conditions. This is not just bad, but like really, really bad. It is a problem that is endemic to a system that has failed. Now, a bank going out here and there, cool. But when the banks are all too big to fail, the major banks, and they can't get in trouble, but all of your regional banks start to collapse and they start getting consumed by these larger banks, then everything becomes too big to fail and competition vanishes. So, I mean, the solution is obvious, which is break up the big banks, but they're not going to do that. We are going to have an oligarchy of banks, a cartel essentially, and they're going to control everything we do. That being said, it does look like there's some chinks in the armor of the SPY, and that we maybe have broken the seal, and we are in a bear market. Finally, the market's picking up to the terrible news, and I honestly don't know what the plunge protection team is going to do. Are they going to just keep pulling money out of thin air, buying up securities and going, or with the 25 basis point raise, they say this will be the last one, but I mean, if that's the case, then you got to let everything fall after this and let it hit hard for a while to defeat inflation. You can't just be like, oh, it's dipping again, and then all of a sudden start slashing rates. You have to let it sit for a while and really let it stew, and it's going to be awful for everybody. So, screwed everything up. But yeah, G-Phone, AHW, happy birthday. I'm going to buy a bunch of UBS puts for beginning of July. We should expect a massive contraction in liquidity end of the quarter as repo funding dries up. Probably. And not only did the repo funding dry up, but what could be taken in repo and margin has significantly dried up with the haircut that was done. Essentially, you have to hold blue chip stocks, and that's it. That or treasury bonds. And at the end of the month, will treasury bonds be worth anything? Probably not, because I don't see any signs that they're going to be raising the debt ceiling. We'll start hearing alarms in like 2 weeks. They'll really be screaming about it. But will the House vote to raise the debt ceiling? The House is controlled by some real wackadoodles right now, and they might be crazy enough to play chicken with fate. So, well, I guess we'll wait and see, right? Still got a roof over my head, still have food to eat, so at least I got that going for me. Lost Waves. A lot of time has passed. Did you watch Pick a Destiny? No, I have not watched Pick a BOFH. Boots and SPY took a big dump after hours. Love to see it. My puts will print tomorrow, assuming we don't rebound in pre-market. That's always the problem, is that, you know, the Federal Reserve goes, let's buy a bunch of securities. And then all of a sudden, your puts don't pay out, and it just sucks. Just let it die. Let everything die. Die, 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 die. Scott Pollan, DTCC collateral haircut is a de facto margin call. That's why we are seeing sell-offs. They're probably selling a bunch of penny stocks right now. I mean, there already were stuff for like stocks that are $5. There's already the haircut involved for them. But there's a bunch of middle price stocks that are being hurt right now that, like, you know, your stock is between $7 and $10 or $5 and $10. You're only getting 50% of the value in margin. So they're going to have to trade up for something more expensive. So you may see a little bolster in some of the bigger stocks as people get rid of their smaller stuff to buy in. So this really is like a stepping on the little guy type mode. But what happens when the treasuries start to be in trouble? That's when we have to really think about it. Double agent. Ryan Casson. DTCC to apply 100% haircuts due to compliance concerns. Across a lot of securities, too. If bonds are below AAA, AA minus, so that'd be BBB plus, they don't count anymore. You can't use them as collateral. That's a big deal. Especially, think about this, right? In 2011, due to brinksmanship on the debt ceiling, U.S. bonds got downgraded from AAA down to, I think, AA, right? Imagine a downgrading of U.S. bonds from whatever status they're right now. I don't know if they're AA or AAA, but down to BBB plus. And all of a sudden, U.S. Treasuries can't be used as collateral for anything because we're not paying our debts. That is brutality. Don't. Just raise the debt ceiling, man. Raise it. Veritarian, that's what I'm thinking. Trojan horse, take their money and report back. Yes, do it. Scott Pollen. DTCC haircut for any assets below AA. Yeah, and most assets are below AA. So, man, that's a lot of municipal bonds that can no longer be used as assets. That is a lot of corporate bonds, all junk bonds, which just de-incentivizes A, lending to these companies, B, anyone buying the bonds that exist. So it's a way indirectly, I think, to murder small cap companies in general. Just mean. It's just mean, but they got to do it. Tobika Chaz just tuned in. What is happening to our banks? Is this a conspiracy or a fact show? Where is your info arriving from? Who is this affecting? What should we do? Well, Tobika Chaz, what's happening to the banks is people are pulling out their money. There's runs on all the banks happening, especially with large depositors. They're just yanking all their money out and they're sticking it somewhere else, whether it's buying Bitcoin or dumping it into larger banks like JP Morgan. They are taking their money out of these banks. At the same time, the depositors' money is being held oftentimes in long-term, low-interest rate bonds and mortgages and things like that. That the interest rate is below that of inflation, so the demand for those bonds are puny and no one wants them. And you can purchase those bonds for pennies on the dollar. So if depositors are pulling their money out, the banks have to sell these bonds at a huge loss, and their assets plummet dramatically, causing even scarier more runs on the banks and so on. It is a self-fulfilling prophecy or self-sustaining cycle of bad news, and a lot of local banks, regional banks, are hit by this, and they're just dying. And most of them should have dumped their low-interest fixed-rate bonds a year and change ago. JP Morgan did. They got rid of all of it. They dumped a lot of them onto the small banks and went, suckers, I'll buy you later. Because if interest rates are at 5%, right? So there are bonds now with 5% interest rates. Why would you spend your money buying interest rates at 1% or 2%? That's just losing money, basically. So the demand for those bonds are non-existent. And that's why those all those regional banks are getting whooped on right now. So, I mean, the best thing, people at FRC lost $100 billion in depositors. Now, if those $100 billion in depositors had taken their money out and used that money to buy puts on their bank, they could have collapsed their own bank and made a fortune in the process. Unless you're in Robinhood, because apparently Robinhood isn't paying off on any of the FRC banks, FRC puts. And they're like, yeah, well, they're worthless. And people are like, no, they're worth a lot. But I'm not going to pay you for them. There's a whole brouhaha going on. Same thing happened when SVB went down. But Yeah, local banks are just toast.